Hello everyone, it's Shikha Kumari. Are you someone who wants to learn financial system? So let's start. What is a financial system? A financial system is a set of institutions which allows the exchange of funds between the financial market participants such as lender, investors and borrowers. Financial systems operate at national and global level both. So what's the meaning of institutes? Institutes are the banks. So banks is the bridge for the investors and the borrowers. So like who wants to invest they can be. So let's take an example. With Reliance Industries CEO Mukesh Ambani wants to start a new business and wants some fund for their starting a business. And on the other side, Nirmala Sitharaman, who is the Finance Minister of India, she saves some money from their salary, so she wants to invest somewhere to get some good return or interest, but they both don't know about each other. Like Mukesh Ambani wants to start a new business, and for that he wants some fund, and on the other side Nirmala Sitharaman wants to invest. For that the institutes, the banks came and take the money from the investor, the Nirmala Sitharaman here, and gave to the borrowers, and the borrower here is the Mukesh Ambani. So that how the financial system works. So there are two types of financial institutions. First is banking and second is non-banking. Banking institutions registered under Banking Institutions Act 1998. Banks as institutes which channel people's savings into productive loans and investments. Thus, banking institutes mainly refers to deposits and loans. So what's that like? What we call as in banking institute work is the banks collects, transfer, pays, exchange, lend, invest or safeguards money for their customer. So like the bank can do the work for their customer to save their money, to collect and pays, exchange and this kind of work. So it also be further classified into organized sectors, unorganized sectors. So let's discuss first about. Now, the first, let's talk about the organized sector. The organized sector consists of the Reserve Bank of India. So, Reserve Bank of India includes the commercial bank, cooperative banks, foreign bank, these and rural banks. So, first, let's talk about the commercial bank. What is a commercial bank? A commercial bank is a financial institutions which accept deposits from the public and gets loan for the purpose of the consumption and investment to make profit. So the most common type of the bank is commercial bank, and the commercial banks are also most significant sector of the Indian banking system. So these banks do banking business to earn profit, obviously, and the banking business, like they also specified in the financing of the internal trade and also perform other ordinary banking activities of accepting deposits, advancing loan, this kind of the stuff the commercial bank do. Now next is the regional rural banks. These banks are under the ownership of the Ministry of the Finance, Government of India. They were created to serve rural areas with basic banking and the financial services. So the RRBs were set up on the recommendation of the working group raised by the M. Narasimha in to October 1975 on the occasion of Gandhi Jayanti, and the main objective of this RRB was to provide credit and other facility to the small and the marginal farmers agriculture. Now next is the cooperative banks. The cooperative banks is the another important segment of the Indian financial system, because the cooperative banks meet the credit needs of the rural areas and the agriculture sector, and the agriculture sector is the largest sector in India. So there is the three tier systems in operating in cooperative banks. So first is state cooperative bank. So, what is a state cooperative bank? It is the topmost body of the this three tiers structure of the cooperative banks, and almost all the states and the union territories have state cooperative banks. And also, the state cooperative banks credits to the members of the district cooperative bank. Now, the next is district cooperative banks. In the middle of the three tiers, cooperative credit structure are the district cooperative banks, and the main function of this district cooperative banks is to provide the credit to the member, primarily operating credit societies. and they are also free to make the loans to individuals. Now the next is the primary credit societies. The primary credit societies are the last link in the three tier systems, and these societies are the grassroots level institutions having a direct link with the people they intend to serve. The success and the strength of the cooperative credit depends upon the primary credit societies. The foreign bank. Foreign bank in India do a make a share of 7% in the total Indian banking sector, whereas giving a profit of 11% to Indian economy. And there are only 1% branch network of foreign banks in India, as they are mostly niche player by the focusing more on the financial trade, wholesale trading or wholesale lending, external commercial borrowing, treasury service, and investment banking. So the banking, like foreign bank, have been working in India for the British days, and the ANZ Greenland Bank, its presence in number of the places is 56 branches, and the Standard Chartered Bank has 21 branches. All other foreign banks have branches less than 10. So these banks has concerned mainly on cooperative clients. Next is the unorganized sector. So it's further divided into two parts. First is Indigenous Bank and the Money Lenders Bank. So let's talk about first is Indigenous Banks. What is an Indigenous Bank? Indigenous Bank. Indigenous banking system is a system of banking that involves private firms or individuals who act as banks by providing financial services such as loans, accepting deposits. Indigenous banking system is made up of indigenous bankers who do not fall under the purview of the government. So there are the individuals or the partnerships come performing under the banking functions. They also act as in financial intermediaries, as the term indigenous indicates that they are the local bankers. Now next is the money lenders. Money lenders depends entirely upon their own fund for their lending. The lender earns interest on the credit, which is charged at the specific percentage of the total amount of the loan extended to the borrowers. So, also the money lenders includes the larger farmers, merchants, jamidar, traders, etc. Now let's talk about the non-banking institutions. A non-banking financial institutions or non-bank financial company is a financial institutions that does not have a full banking license or is not supervised by the national or international banking regulatory agencies. So it's also further divided into the two parts. First is organized sector and second is the unorganized sector. So let's talk about first is the organized sector. Now the organized sector. So organized sector is also divided into two parts: development financial institutions and investment institutions. Now next talk about the development financial institutions. What is the development financial institutions? Development financial institutes includes IDBI, IFCI, IFBI, IRDC, etc. State financial cooperatives, state industrial development corporations, agriculture development financial institutions like NABARD, land development banks. So these are the development financial institutions. Now next is the investment institutions. Investment institutions includes financial institutions like LIC, GIC, mutual funds which mobilize savings of the public at a larger through the different schemes, and they invest their funds in a business through the cooperative and the government securities. Thank you for watching this video. Hope you like